South African retailer Woolworths has posted a 25% rise in full-year headline earnings per share, helped by recovering demand in Africa's biggest economy. Revenue for the year rose just over 8% to 23.7 billion rand. Earlier, Godfrey spoke to Woolworths CEO Simon Susman.
Woolies in the last 3 years has done an enormous amount of work in repositioning the business. And I think it's true to say that 3 years ago, when the recession hit, we were caught unawares and we did not have our price architecture sorted and we didn't have our ranges clearly enough defined. So we've done a lot of work on sorting out our price architecture, particularly the opening prices. They are now very competitive and very sharp, but we've also introduced merchandise at the higher levels for those of our customers who want to buy something a little bit more different and a little bit more special, like Country Road. So we've re-architected our merchandise. Price inflation has dropped, so our price inflation is lower. The value offer is better. Our customers are feeling a little bit more confident in themselves anyway. And as a result of that, it all came together and we did, yes, have a good year.
Talk to us about the condition of the customer that you're seeing at the upper end of the market. We do know that the economy has recovered, but we do also know that there are still worries within that recovery. And we have seen the national retail sales numbers coming under pressure again. What are you seeing in terms of that customer?
Yes, I think Woolworths' primary customer is LSM 8, 9 and 10. And then we have a secondary customer, which is LSM 5, 6 and 7. But the bulk of the money that is spent in Woolworths is from LSM 8, 9 and 10 customers. And if you take that customer 3 years ago, that customer was the most affected by the start of the world economic crisis. They saw their pension funds dropping, they saw their job opportunities being threatened, they saw interest rates at all-time highs, high fuel costs, everything was costing more money. So 3 years ago we had a very uncertain customer. Much of those elements have moved on. Interest rates are low, the world economic crisis is not through, we're all aware of that, but it's settled. Your savings have revalued a bit. If you've got shares in the stock market, they've revalued. Your house prices stopped dropping. There's a confidence about South Africa. I think the World Cup helped everybody. We're all rather proud of that. And this LSM 9 and 10 customer, 8, 9 and 10 customer, who's the Woolworths Heartland customer, is feeling more confident. And we like that, and we think that's good for the country into the future.
Just how intense was that competition? Because I see at the same time you were able to ramp up your margins to about 7% from 6.2%.
The competition for all customers, LSM 5 right the way through to 10, is intense in South Africa. We have a highly competitive retail market and a very sophisticated retail market. In fact, a lot of retail visitors who come to South Africa are expecting a much less sophisticated retail market. These competitors of ours are on their game, they're good, they're aggressive, and we like them as competitors. Yeah. So it's a highly competitive market, and in particular for the customer who has the money to spend, who is the 8, 9 and 10 customer.
How are you dealing with that competition? What kind of strategy do you have?
There's only one way to win customers over, and that is to provide them with unbelievable value for money products. And in Woolworths' case, that means high quality, beautiful style, very durable, at remarkably good prices. And if you don't give any one of those that part of the formula, you will lose your customer.
Did you have to cut prices?
We have cut prices in certain areas, and we've been able to do that by improving how we source the product. The one thing that you can't do in Woolworths is take quality out of a product. So it's an easy way to cut prices by taking quality out of a product. Anybody can do that. Our customers would not accept that of us. So we've been a little bit more clever in our ability to source high quality goods at better prices.
Now, in 2007, I remember the last time that I spoke to you, it was around about 50-50, but now we're talking about 50-60. Is there a target here that you are looking for in terms of that balance between the two segments?
Yes, bear in mind that Woolworths has a much smaller share of the food market. We have about 9% of the food market in South Africa, and we have 15-16% of the clothing market. So you could argue that it's easier to gain share of market in the food market because you're coming off a smaller base. We also think we have a very unique formula in food, which is quite challenging for our competitors to replicate, and that is about quality, innovation, at now increasingly very affordable prices. And customers are warming to that concept. We had some problems a few years ago that our availability on a daily basis in the store wasn't as good as it should have been, and we're getting on top of that now. So customers can shop at Woolies with a lot more confidence.
Going forward, is there a target for that balance, or is that a free or fall really between the two divisions?
No, we set no targets of that sort. We think that both our clothing business and our food business have significant potential to grow, and we will push them as hard as either of them can go.
Given the fast pace at which food has grown, is there a danger that Woolies could become just a food store?
I wouldn't call it a danger at all, and it won't happen. We have a very strong clothing business, a very strong home business, and a beauty business. They will grow, and our food business will grow. And the joy of Woolies is that you can get both these sides of the house together under one roof, and customers seem to like that.
Let's talk about Africa. You are in a number of African countries now. Is there a target to cover the rest of the continent? We do know that a lot of South African retailers have been moving into the rest of the continent. What is Woolies' target?
We think Africa is a natural growth point for South African business, and in particular for Woolies. And the African consumer is a consumer that's really growing. So there's this new middle class and upper middle class happening in Africa just as fast, if not faster, than in South Africa. These people, like the South African consumers, are clever. They want high quality, value for money products, but at prices that are affordable to them. We can do that, particularly on our clothing offer. It's very difficult for us to ship food all the way up through Africa, but we can ship clothing. We have a very successful business today in certain parts of Africa. We're strong in Botswana.
How many countries now?
We're in about 12 countries at the moment.
What's the target?
And the target is to go to another 4 or 5 countries, but to deepen our market penetration within each of those countries. So for the moment, we've got our fastest growth rate in Kenya, and we're really excited about Kenya. You asked me, when can I get into a Woolies store in Kenya? The answer is as soon as you get off the plane. We've got 3 highly successful stores there, and we want to double and treble the number of stores there.
I suppose the big question is, what about Nigeria?
Nigeria we see as the prize, but it is a very difficult market to enter. We had a store in Nigeria a few years ago, and the Nigerian government chose to put in a blanket ban on importing all clothing into Nigeria, so that made that impossible. We think there's now a shift in thinking in Nigeria, and if those barriers are taken down, we will trade in Nigeria, and we think it's a great market.